Good morning and welcome back to Almus Market Mornings. After a dreary Monday, we are in for an optimistic Tuesday as Trump says he's holding off on further attacks on Iran, slightly boosting the optimism over a peace deal. Largely, the reactions have been well contained as of now because markets may have PTSD from reacting too strongly on such news items in the past. US also announced a new waiver allowing sale of Russian oil that are already in the tankers with an aim to stabilize physical markets. This is quite positive for countries like India, which are in need to secure such supplies. There's also a small hike in petrol and diesel prices in India. This is the second round of hikes in which petrol prices have been increased by approximately 91 paise and diesel by 94 paise. Now, this figure varies depending on the state. Good morning, JK. A bit of a relief for India in terms of purchase of Russian oil. What are you making out of this development?
Hi, good morning, Swaraj. Yeah, I think this was one challenge that was, coming up for India because after the Gulf War disruption on supply chains, India had resorted to, and of course, this was also um due to waiver of sanction by US, that we were importing more from Russia. And then recently there was apprehension that this sanction is the waiver is ending in the middle of this month. But looking at the way the Gulf War is continuing and the Strait of Hormuz continues to be closed, I think, and also the impact that it is having on the oil prices, particularly in the US economy also, US administration has decided to, continue the waiver for a month more. And that's a big relief for India, no doubt. In terms of supplies, not in terms of prices. The prices remain high, and that is, that continues to be the challenge that India will have, no doubt. But there's also a headline that is not so encouraging for India because from the finance ministry source or the government source has said that India is not considering a cut in capital gains tax on foreign portfolio investors. So their view is that FPAs are neither reducing India allocations based on their assessment of country sector activeness, nor due to global shift in capital flows to themes such as artificial intelligence, etc. So they feel no need to do that right now. So my sense is that this is not the right time to do it because if they do also, it's very unlikely to have some effect because the global cues are still very negative. And if you look at the sentiment in the rupee market, it's completely, in the grip of bears. And you can see that this month alone we have weakened nearly 2%, and that is continuing despite supplies from RBI intermittently, and oil companies continue to buy. Or rather, despite RBI's earlier direction that they should stop accessing the spot market and use their credit lines, it appears that this demand is continuing even in the market. So regularly it is getting pushed up, the dollar rupee. So no relief for the rupee in the near term. In the meantime, there's also a hint of hawkishness on the rates that has come from the Reserve Bank of India. The governor said that RBI is keeping a close watch to see if the West Asia conflict induced supply shock leading to generalized price pressure. So that is something that every country is looking at, whether it is confined to fuel price and the headline inflation, or it is also seeping into the core inflation and the broad-based price pressures that would need a policy response. So this is what even the governor also has hinted. So it will be interesting to see when they meet in January first week what kind of stance they announce, and whether there's a hint of a rate hike going forward if the war continues further into June. So this is what the market will be looking at. At least one part of the market, that's Indian stocks, have at least been not taking things too negatively right now. At least we have seen some moderation in the FII outflows rather, and the stocks keep bouncing from the lows. So maybe some sort of a value buying at some levels are emerging, but at least you cannot say that the trend is changed, but definitely the trend has not changed for the rupee. And if I look at the past episodes of big rupee weaknesses, be it global financial crisis or the COVID crisis, the rupees turnaround always happens with some positive development in the global scenario, and most of the times it is with easing monetary policy by the Fed. And this time we are not anywhere close to that, because in US is also facing high inflation. So I think we have to contend with the continued rupee weakness for some more time, and the kind of good news on the oil supplies from Russia and all, it's going to be only reduce the challenge, but not eliminate the challenge. That is what we see. In the global markets, the yields have not relented. There was a small relief when Trump reported agreement to not to attack Iran, for now heeding to what the Middle East countries had requested. But I think in any case, I don't think market had any doubt that the war is going to end soon. So long as it is only a ceasefire and there is no peace agreement, there is always a threat that they could, re-escalate once again, and oil prices remain high with the Strait of Hormuz closed. And that is a key thing for the market. So the yields are not yielding on the downside. So prices are going down, and more it goes up, the yields. I think the higher the challenges. We have the Japanese sovereign market also under pressure. Uh, UK is also adding to the pressure because of the political situation. And now we have to see whether there is a coordinated action that the G7, who is meeting currently to discuss the situation arising out of the Gulf War, as well as because of the bond market moves, whether there is any action that they propose to come out with. And so I'm not too hopeful, because so long as Iran is in control of the supply chain in Hormuz Strait, what can they do is a big question mark. So I think government bond yields are set to be on the higher level, not going to relevant. And the stock markets also now started to feel the heat. Of course, there is a important data point for the market when Nvidia announces the results on Wednesday. Expectations, as usual, are quite high, and any disappointment can push the Nasdaq down, which is already 2.5% down in the last two sessions. So that is something that just a pause for the market, perhaps in the current situation. Uh, Dollar is still hovering in the ranges, though it has had a tendency to go up, but the rally is not really, I can say it's not a trendy up move that we have seen in the dollar. Uh, Dollar yen is finding it difficult to stay above 159. Similarly, euro has not been able to break the 1.16. Interestingly, data today announced also shows that the Chinese and the Japanese have actually reduced their holding of US treasuries in the latest month. So there is a additional pressure on yields because the holdings are coming down by the foreigners, and they have to find more and more buyers from the local market. So it's a twin problem for the US: the inflation keeping the yields higher, as well as the lack of demand, which is also leading to the bond prices being lower. So overall, not just India, overall the global markets are facing the heat right now, and one really does not see right now what solution can be there in the near term. Thank you.
Thank you, Jack. And yeah, yesterday's news item was slightly sort of positive, but not really. We aren't seeing much of a reaction broadly because, till the time there is no lasting agreement, this closure of Hormuz, it is painful. We are seeing that yields haven't relented. They are on their path higher, and that's sort of impacting everything else as well. Central banks are concerned whether inflation is more broad-based or whether it's just temporary because of the Iran war. So as of now, nothing has changed. The commentary remains similar to what we were discussing yesterday as well. Sentiment in the rupee market, it's also quite negative as of now. And the rupee weakness should continue till the time there are any significant positive cues. That's it from us today. Thanks for listening. We will catch up tomorrow with the fresh round of updates.